Hello, my name is Melissa Falcone, and I'm a mortgage consultant for Allied Home Mortgage in Allentown, Pennsylvania. I'm also a business partner of Moriah Martin of Remax Real Estate. Today I want to talk to you about some key elements of the mortgage process. The first key element would be the difference between a down payment and closing costs. It's a misunderstanding when Moriah or I would ask you, what type of down payment are you looking to place on your home? The down payment is actually the amount of money that you're placing on your mortgage. There's also a deposit. The deposit is something that Moriah will speak to you about if she hasn't already. That's the amount of money that you're looking to put down. That money is also going to be taken in the end and applied towards your closing costs. But the down payment is actually the amount of money that you're putting down on the mortgage. Closing cost is a separate issue. Closing costs would actually be the amount of money that it takes to actually buy the home. Closing costs are actually listed in what is called your good faith estimate. A good faith estimate is simply that. It's an estimate of costs. The closing costs will actually include typically your appraisal, bank fees, title fees, the per diem interest, which per diem interest is the date that you close to the end of the month, how many days in between there you're charged a specific set of amount of money, such as $30 a day. Obviously it's cheaper if you close at the end of the month, less days of interest. The closing costs also include your again, all your title fees, your title insurance, wire fees, government filing fees. The closing costs will also include your transfer tax, which is required, and that can differ by county, differ by state, but the transfer tax typically is 1% for both the buyer and seller. But again, that can vary. You need to check with your county and your title company. Also, the mortgage terms. What is a mortgage term? A mortgage term is the length of your mortgage. How many years do you have your mortgage for? This term can come in 10 years, 15 years, 20 years, 25, 30, 40. It's going to also depend on the program. Some programs only have a limited amount of terms, but you will just have to check, to make sure that the program or the term that you want is available with that program. Prepayment penalties. I truly believe in not having my clients not have a prepayment penalty. A prepayment penalty is accompanied with the program that you are actually approved for. Most of the programs that I use do not have prepayment penalties, but there are some programs out there that do. The prepayment penalty is actually a fee that the lender charges you if you pay off that mortgage in full ahead of the scheduled time. Now, the prepayment penalty can come in certain time frames, such as you could have a 2-year prepayment penalty. That means that if you would refinance or sell your home within 2 years from the date of that transaction, you will be charged a specific percent of money in order to get out of that. So if you want to refinance, say the interest rates are better and you want to refinance, you're going to have to pay, say 6%, for example, of your total loan amount in order to get out of that mortgage. It's just, to me, it's unnecessary wasteful money. I'd rather see you take that money and invest it or something of the other sort than lose it like that. So your best bet is not to have a prepayment penalty. The other item, interest rates. Okay, the interest rate is the percentage of interest that you're paying on your mortgage. Obviously, the lower interest rate, lower monthly payment, better you will be. The interest rates can differ between programs, between mortgage programs. It's also, the reason for that is because there's an associated risk between the mortgage programs. You may have a program that's very, very flexible. They may be a little bit more lenient, a little bit more understanding to your scenario, but the interest rate may be higher because of that. They want to make sure that they make their most out of their investment. It's their investment too. While you're placing a bid with Moriah, you will be deciding on an interest rate range. This will actually be placed onto your agreement of sale. The interest rate range, for example, could be 6% to 7%. It's all going to be a matter of what you're comfortable, because you have to understand that your interest rate is not initially locked in until an agreement of sale is signed. Once an agreement of sale is signed, we can lock into an interest rate, and I will continue to shop. If the interest rates fall, we could possibly switch you to a different lender with that according program and get you that lower interest rate. As far as switching lenders and when that can be done, I will continue to shop till at least 2.5 weeks before your closing date. I think that's pretty much about it regarding your interest rates. Again, I will lock you into an initial interest rate. This is for your best interest. The market is volatile. You don't want to. You want to take advantage of an interest rate, get the lowest possible, lock in, and then I will continue to shop for you. Pre-approval letters. Pre-approval letters. Once you have gone through the pre-qualification process and you've been pre-approved, a pre-approval letter is required by Moriah to submit your bid, or to submit with your bid. That I can provide to you 7 days a week. And this letter just consists of the amount that you're approved of, who had pre-approved you for, and how long you have been pre-approved for. And typically that's 45 days. After 45-day mark, we will have to again look at your pre-approval status just to make sure that you're making the same amount of income, you're at the same job, the same status. Mortgage commitment. Mortgage commitment through your loan process, through the home buying process, and signed on your agreement of sale will be a date, which means that you are committed to a mortgage. The date is chosen by you and Moriah, and I will provide what's called a mortgage commitment letter to both Moriah and the listing agent. Finally, a clear to close. It's music to everyone's ears. What is meant by a clear to close is that all the documents that I have requested are submitted to the underwriter. All the stipulations that the underwriter requires have been satisfied, such as they review your pay stub. They're satisfied with the results of your pay stub, or your bank statement, or your tax returns. All of this have been satisfied, and they've cleared that condition. The satisfied has been met. We're done with that. Once all the stipulations and conditions have been met, you will receive a notice from the underwriter that says clear to close. That means we're done with all the hard stuff. We're ready to go to the closing table. At that time, once you have a clear to close, I will then arrange to have your signing package with all the important papers, your note, your mortgage, everything, sent to the title company for closing. So it's pretty much what the clear to close consists of. I want to thank you very much for watching my video, and Moriah and I look forward to helping you in the near future. Thank you.